Hi friends, today we're going to talk about HIMS. HIMS has been going to a bit of a bumpy road lately. It's been a while since we talked about it. If you've been following the channel for a while, you know that 2 years ago we were talking about it when it was about $2 or $3. You could have made a lot of money if you sold it at the top. Now it's a bit in choppy waters, but it's been a while since we talked about HIMS. We haven't gone over the earnings report they did at the beginning of May, and yesterday there was some big news that made the stock pop for 5%. So we'll talk about that, talk about the earnings report, talk about how we see HIMS in the future, and see if we like this company. Spoiler, we like this company. So let's go. First off, they had a revenue miss this quarter. Revenue was about $608 million, which means the company only grew 4% year over year and even dropped in revenue quarter over quarter. However, the management sees this quarter as a transition phase. The reason the revenue went lower than expected is because in March of this year, the management said they would no longer advertise cheaper, highly lucrative compound weight loss products. Instead, HIMS shifted towards offering Novo's Nordisk branded Wegovy. Because of that, this pivot created a short-time artificial drag in revenue in the US. If we look at the international market, there was some hyper growth, really astronomical growth. Last year in the rest of the world they had a revenue of $7.3 million. Now they have a revenue of $78.2 million. They 10x'd their revenue in a year. Good thing to see also was that this quarter they grew their subscription base by 9% year over year. Now the monthly revenue per customer dropped from $85 to $80 per customers, and this explains why even despite they have more customers and more subscriptions, the revenue went down. Now for the next quarter, the management expects the revenue to again increase steadily to about $680 to $700 million. It also increased their full year guidance to $2.8 to $3 billion. So they're really expecting that this is just a minor hiccup this quarter, and that from next quarter on they will continue growing their revenue and their income. Now they shifted towards branded GLP-1 products. This created restructuring costs. They also had to do legal settlements. They had to pay stock-based compensations. All this created a loss for this quarter, for the first time in many years. Now, despite these losses, HIMS pulled in $89.4 million in operational cash flow and $53 million in free cash flow, leaving them at $751 million in cash and short-term investment. So they're really healthy, they have no issues, and they're expecting to begin turning a profit again from next quarter on. Management is really doing a good job. Management was also very happy to announce that HERS, the women's health segment, is scaling so rapidly it's expected to surpass $1 billion in revenue for the full year of 2026. So this company really is growing, really is turning a profit, not this quarter, but it will in the whole year. They're expecting to have a full year profit of about $350 million. The revenue is expected to be about $2.83 billion for the whole year. So the company is really doing great. Now, since their earnings, there has been some good news. They raised about $350 million of capital with a 0% convertible senior note due in 2032. Now, they originally planned to have about $300 million, but because the demand was so big, they upped it to $350 million. They're expecting to use this money for new acquisitions or for acquisitions like Eucalyptus in Australia. It's great to see that they get this money with 0% convertible senior notes, which will help them grow the company even faster and even further internationally. Now, yesterday the stock popped by about 5 to 6%. Why? Because there was some insider buying and that boosts the confidence in the stock. The company director, David Wells, purchased 48,000 shares with a total transaction value of about $1.17 million. So that really shows that he believes in the company, he believes in the stock, he believes it will grow fast, and the way they execute, I also believe in that. And I really can't blame him. If we look at the way they are executing now, they are really very aggressively acquiring companies, growing. They are really pushing on becoming bigger and bigger. Currently, they have a market cap of about $5.8 billion with an expected revenue this year of, let's say, $3 billion with a profit of about $350 million. It might seem a bit expensive. However, they are growing so fast and working so hard on growing the company that I expect this stock to only go up in the next couple of years. And I wouldn't be surprised if in 5 years this stock is trading at $200. This really is a great stock, has great momentum on it, great management. The company is turning a profit. There's still a lot of growth potential outside of the US, even inside the US. If they can keep on delivering, I can really recommend this stock. I don't see it 100x in the next 5 to 10 years, but a 10x is really on the table. So let me know, have you bought HIMS in the past and have you made a nice profit? Are you thinking about buying HIMS? Are there better healthcare businesses? Let me know. See you. Bye.